Traders, investors, and peeps, what is going on? We are back. So let's talk about Nano. You know we got to talk about Nano. I've had quite the day or two here. So I posted on Twitter this morning. We were talking about in the Discord last night about how it looked like we were getting set up for the same thing that happened last time. So you see the sell-off, the rally, and then the testing of that high, and multiple retests, and then it just downtrends. You know, notice the MAC too. The upswing, same level, same angle. You know, very similar setup. You know, the squeeze, RSI, candles. I mean, lots of stuff and things look very similar. Hence the sad face. So, you know, we started this trend again. Lots of retesting. You know, and I said it's really important that we hold the 864. We got at the top of that wedge there. You know, did lots of testing, and we're sideways pretty much the whole day. And last time this downtrend happened, there was the rally, a test for a day, and then the downtrend. So today was the day we were either up or repeating ourselves or, you know, going down in some sort of fashion. And we didn't. We broke that resistance, and then we broke the next resistance also, and it held. So this was a pretty massive move today. Let's look at the day chart. So we broke out, touched and turned, and then once we got up here in this level, it was validated again right here, so I drew a trend line up and put some other levels in there. We broke out of the wedge into the next zone, tested that level, and actually broke through it, downtrended, and we got to the top of that second wedge there, and the trend continued. So we are sitting pretty much at the high of the day. You know, notice all the heads being cut off right there at the 973. It's not there anymore, but there was a pretty big sell wall there on the level 2, and you know, volume's dying off, so it's not really going to do a whole lot more, I don't think, but that's okay. It did enough. It's been very busy, and we're happy with it. Now, what does this mean going forward? We are about $1 shy or 75 cents shy of all-time highs. And so if you look here, you know, any day that we've tested the high, it rarely breaks out that same day. So, you know, over here, test the high, touches and turns, breaks it later. You know, the high right here was broken, and then they had an offering. You know, high here broken, they had an offering. So case in point, if they break that level, I don't know. Be careful. I'm probably going to take profits before that. But yeah, I mean, until they stop having offerings, I'm just going to assume that we're going to have an offering every couple weeks anytime we break an all-time high. Or a high, rather. So, yep. Also kind of circling back to what we were saying, you know, if it touches this high, be ready for it to turn around. I can't really find any candles here, any days here where it tests a high. You know, but when it touches a high, it rarely breaks it that same day. So it tests, breaks, but then it took 2 levels. You know, test, breaks, and then it took 2 levels. I don't have the old levels drawn back here anymore, but that seems to be the trend. And so, yeah, I'm not going to hold through this high. I'm going to be trimming most of my position, you know, at that point, somewhere in here in the $10 range, you know, or a little bit before that. Anyways, let's talk about risk management and scaling, okay? Let's start with scaling first. I mean, they both kind of go hand in hand, but, you know, you've heard plenty of times, oh, you got to manage your risk, you know, you got to have risk management, but, you know, what does that mean? You know, Warren Buffett said it best, in order to analyze risk, you have to understand what you're doing first, right? So you got to get screen time, man. You got to make good trades. You got to make bad trades. You got to do back testing. You know, although, you know, even though back testing on Thinkorswim and other software is very helpful, nothing will substitute for the real deal when there's actually money on the line and there's risk involved. Then you get to see how you react under certain circumstances, under different scenarios, different setups, right? Risk management is analyzing and understanding the inherent risk of what you're doing. Dip buying. Dip buying is always risky. Is it the bottom? I don't know. You know what I mean? So there's always inherent risk there. But if you're buying something like, let's say, Fubo, for instance, and also let's touch on this now. If I post about something, it is not a hey, buy this now. It is merely an observation. It broke support, not tight, right? I also said, I don't know. I say lots of stuff and things. My point is, unless I'm saying, hey, I'm buying this now, or hey, I'm doing this, or I think you should do that, that's what that is. This doesn't mean buy Riot. This means Riot's doing good. I'm sweating. It's so good, right? So, you know, gift the rip, chart, and explain the dip. Or, so you have to analyze your risk. You got to understand what you're setting yourself up for. If you're getting into something like Fubo, when it's downtrending like this, okay, yeah, a lot of inherent upside, nice. Downtrending for a couple of days, nice. Some turn actions, some level validation, nice. But you are entering a position that has, well, this came out today that, there's a short seller in on it, or a bigger one at least. Multiple analyst downgrades, but we've talked about how sketchy those have been. But whether they're legitimate or not, they're out there and they're going to influence people, clearly, right? So, if you're seeing this thing starting to correct, thinking, hey, maybe this is the breakout. Maybe it's going to do some stuff and things again. Well, that's good and fine, but your sizing and scaling should be directly proportional to your conviction level and your risk tolerance. So, you're getting into a risky trade right now. There isn't any really good news or anything. This thing has a lot more inherent downside at the moment than it does upside. So you set stop losses, you go small, and you scale into your position slowly. You'd rather go small and be like, shit, it's running. I should have bought more than like, oh my god, this isn't the correction. This isn't the reversal. I went all in over here, and now it's doing that. Well, now I'm just going to hold it because I'm down too much. Like, no, dude, you can't do that. You have to analyze your risk. You got to have stop losses set. Got to be careful, man. I mean, sure, you got to pay your market tuition eventually, but, there's no reason to just be reckless with your money and throw it around, right? So, be careful, be guarded, and manage your risk. And part of managing your risk is sizing, is scaling in and scaling out. Perfect example, nano dimensioning. So I'm sitting at like a 780 or 760 something fill. I said, okay, I really like this level. I'll go big in here. I'll pick up 200 shares. But that's only half of the money I'm going to throw at this thing. So I said, okay, trend's continuing. I'm happy with it. Add another 50, add another 100. It's all about scaling. And you scale to your conviction. When this thing, when something drops like this because of an offering, especially Nano, because I'm used to them at this point, I have a pretty good confidence level that it's not going to drop much under that offering level, the 750 that the offering was at. So fairly convinced this is the bottom. I bought 200 shares. I said, okay, I'm willing to order another 200 shares, 400 total. So I'm going to scale into this thing. So I went big at the start only because I felt really good about it. I felt like this was a good setup. This is a good level. This was a pretty solid bottom. So I went in fairly heavily and then added like 50, 100, 100 as I went up. And now I'm over in this region and I'm sitting at like a 780 fill. So sure, I could have bought 400 shares right there and that would have been better. But no crystal balls. I don't know what's going to happen. I do know that this has a good chance at rallying, so I'll start a position, and then as it goes up, I'll reward myself by, adding shares to my position. Having stop set all along, and the thing rides up, and it does lots of stuff and things. So, as you saw in that Twitter post, I was a little bit sketched out by this repeat of this setup. I wasn't sure that we were going to be able to break and hold this level. And so once we did and we got up here, I said, all right, I'm good. That's enough. I sold 100 shares. Dropped down, came back up. I think I sold like 50 shares there or something. So I'm sitting at like 150 shares now. I sold most of my position, or half of it at least. And I'll let the rest play out. But anyways, that is it. Hit the thing, do the stuff, follow me on the stuff and things if you don't. Join the Discord. And of course, if you want to join Webull, I got the discount link or whatever in the description below. You know, as well as other resources, scanners, various stuff and things. So, yes. I hope you boys enjoyed, and I will catch you in the next one.